Welcome to ShortView Trading, it's your morning market hit for Wednesday, 16th of September. What matters today for traders? Well, markets were up again yesterday with the S&P up around 0.5%, continuing its rally from the support it found a few days ago around its 50-day moving average. With that, techs also joined in. The NASDAQ was strong, leading the charge really of the main indices along with the Philly SOX. Those indices up 1.4 and 1.7% yesterday, and the key areas of strength in the market. It was broad-based as well. Europe got involved with a broad European index up around 0.7%. But with that, our short-term market timing models, our 1 to 2 week market timing models have all sort of started to move higher. Back on the 8th, 9th of September, we had a pretty collective across the board strong buy signal from those models. That was generated after the pullback we saw in early September. And of course, with that, we were encouraged to start moving long. But those models in aggregate now are moving higher. They've got a bit more of a mixed message. Some of them are mid-range and neutral. For example, if we look at our risk appetite scoring system we're showing you now, it's pretty much mid-range these days. That's where it's moved overnight. Equally, if we look at the technical scoring system, it's bounced from its strong buy level. And some of the models are even just about starting to get to sell. So the put to call ratio, for example, is touching once again just about on its sell level. So in aggregate, models are moving higher. And with that, of course, the markets have been anticipating what they're going to get from the Fed. You know, typical price action from markets is buy the rumor, sell the fact. They are, of course, forward-looking beasts. So they look forward, they try and price in what they expect to occur. So often we see markets rallying into Fed meetings. Of course, Fed is critical to how market direction plays out. It's critical to the amount of liquidity in the system, and their dovish or not, their hawkish tilt is key to thinking about how markets will evolve going forward. So markets rally into the Fed typically when a dovish tilt is expected. That's very much what we're expecting in this Fed meeting later on today, Wednesday evening London hours. And indeed, of course, markets often pop and peak in a near-term basis on the Fed announcement or during the Q&A in the press conference when perhaps Jerome Powell makes some dovish comments that the market then prices in. That often marks a near-term high in markets, and I suspect that's perfectly plausible today. And that would provide an opportunity, I think, to step back from these markets, close long positions and observe. And the reason we think observing is important is because we may well be in that classic three-wave pullback. And it may well be we're in the wave 2 relief rally at the moment. To remind you, most pullbacks, is small or indeed large ones, often comprised of 3 waves, occasionally 5. But the typical 3-wave pattern is a wave 1 of selling, a wave 2 relief rally, and that's potentially what we've been in these last few trading sessions. And then a third wave, which is a wave of selling back to the intraday lows of wave 1 or even breaking through them. So that would be a typical price pattern for a pullback, and it's perfectly plausible in this situation. Hence why we're inclined to observe if we get some strength on the Fed tonight and an opportunity to take long positions off. For the full analysis of how we're playing this market, please see today's Daily Rag available to subscribers via the website. So what are we watching today? Well, of course, it's the Fed is the key, absolutely. The announcement 7 p.m. London time, as well as the monetary policy decision. You'll get the economic projections that come out once every quarter. On top of that, there's the press conference, 7:30 p.m. London time, where Jerome Powell will lay out a statement and take some Q&A. Those are all key, all critical, give us a sense of where Jerome Powell's at, where the Fed is at, a bit more flesh on the bones of their monetary policy review and their new average 2% inflation target. Over and above that, there's some quite interesting macro out the States, including retail sales and some housing market data, the NAHB housing market index. You also, of course, have weekly mortgage indices and mortgage applications, which is always interesting at this current time. So that's it from us. That's your morning market hit for Wednesday, 16th of September. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Facebook, Twitter, and or LinkedIn. Thank you for listening. Stay safe, trade well.